Happy Monday, YouTube. I hope you're all enjoying your day. So I have Ryan Amrhein of West Penn Financial, our local loan officer, on with me today. You know, when I created this YouTube channel, I wanted it to be informative so that anybody involved in the buying and or selling process for the first time, or if you've done this many times, you have current information about this ever-changing real estate market. So that when you're ready to make that decision to call me to buy or sell your home, or call Ryan to help you buy a home, you have all the information that you have at your fingertips. So, hey, Ryan, just tell us a little bit about yourself, please.
Hi, Kay. Appreciate having me today. Thank you so much. Congratulations on starting the new page. It's always exciting to get going on YouTube. So I'm Ryan Amrhein. I work with West Penn Financial. We are Pittsburgh's local lender. I've been a loan officer for 10 years. You're absolutely correct. The real estate industry never stays the same. It's always changing. Mortgage rules are always changing. And that's why we're here to help guide whoever needs it through the process.
Fantastic. Thank you. So, you know, Ryan, buyers have a lot of questions, you know, when they're buying their first home. And there's a lot of people in their first apartment right now, or just living on their own for the first time. If I were a first-time home buyer, what advice would you give me?
Well, that's an easy one. The easy advice is to contact myself and yourself as quickly as possible in the process to figure out your path. Everyone's path is a little bit different. Maybe you're working to save up funds. Maybe you're getting a gift from a family member and you can get ready to go quicker. Maybe you're buying a family member's home, right? There's all kinds of different scenarios out there, but really it's getting information, figuring out the numbers from me, what you can get pre-approved for, and what the cash to close will be. Because I think one of the biggest misconceptions for a first-time home buyer is, hey, I have the down payment amount, but they don't understand mortgage closing costs. So we will go over closing costs. We will show them all the mortgage programs they may qualify for. And then we say, now give Kay a call. Here's what you can qualify for. Here's what you're happy with monthly payment. And then they would work with you to find the property.
Great. Thank you for that information. All good information.
Absolutely. I mean, again, Kay, it's just a conversation, right? It's not rocket science. It's nothing crazy. Everything starts with a good conversation. A 10, 15-minute conversation just to understand things is the best way to start.
Wonderful. Thank you. So, Ryan, if a first-time home buyer approached you, what's your best advice to give them to help prepare for the mortgage process and you?
So that's called a pre-approval, Kay. That should be the first step when you are serious about buying a home. And a pre-approval is when you talk to me, we go over all of your income requirements, your job history, how much you have saved up, and we complete a credit pull to let you know how much you are qualified for. Once you're pre-approved, you're also pre-approved for 120 days. So it's not like you have to go find a house that day. You're pre-approved for 4 months. You know what you're good for. You know what you're qualified for. And that way they have time to meet with you, get their search done, so they know exactly what area, purchase price, et cetera, they're going to be looking in, so you can find them that home.
Fantastic. So, Ryan, I have a lot of first-time home buyers tell me, you know what? I don't have 20% down. How do I get a house if I don't have 20% down?
That is the second biggest misconception behind not knowing mortgage closing costs. The other side is the down payment. So a lot of new first home buyers will listen to family members. I understand they're your family. You should trust them, but they may not have bought a home for 20 years. 20, 30, 40 years ago, the requirements might have been 20% down, where that is absolutely not the case anymore. There's 4 main loan types out there. If you're a first-time home buyer, a conventional loan is a minimum of 3% down. An FHA loan is a minimum of 3.5% down. A USDA loan, which is for rural housing only, is a 0% down minimum. And the fourth, for a VA loan or veterans of the armed services, that is also a 0% down. So you have 0, 0, 3% or 3.5% is the minimum down payments on all four main mortgage types. So that is absolutely not true. You do not need 20% down. Now, why do we hear 20% down a lot in the industry? That's because for a conventional loan, if you put 20% down, you do not have to pay mortgage insurance. And that is something that a lot of buyers don't want to pay, because the mortgage insurance only protects the lender in case you get foreclosed on. But again, 3%, 3.5%, 0%, that's a whole lot less than 20% down to get you into the home so you can start that American dream.
Fantastic. Thank you for that information. Such great information, Ryan. And the last thing, from a loan officer perspective, if somebody asks you, Ryan, how do I save money for closing costs? What's your best advice to give them?
Well, if you're really, if the cash to close, your down payment is the last hurdle for you, we can talk about closing, right? Looking at it at small numbers, right? Saving $10 a week or $100 a month is way easier than saying, I need to save X, right? Taking it 1 month at a time, looking over your budget, right? Maybe a lot of folks don't even know that they're paying 5 subscription services they haven't used in 2 years, right? Maybe you should, print out that online bank statement, see what you've spent the last month, and maybe there's ways that you can cut down in cost. Maybe we, make coffee at home instead of going to Starbucks. Maybe we eat at home.
Blasphemy. That's blasphemy, Ryan.
Maybe we eat at home instead of eating out. And it's all about budgeting. But also, there are other programs on top of the 4 main basic mortgage programs. There's PHFA, which is the Pennsylvania Housing Finance Agency. They have closing cost assistance programs. So if it's really just getting down to the nitty-gritty of you're trying to save up, or I don't think I have enough cash to close, the state agency allows you to close with as little as $1,000 out of pocket. Now, will everyone qualify for that program? No. But if they can get qualified, if they can get some seller assistance, if they use the closing cost assistance, we have buyers closing on homes for $1,000, and that is no BSK. That is a legit program, and that is through the state of PA. So again, I don't think a lot of new home buyers realize there's a lot of unique programs right now. Interest rates are higher, which isn't always great. What comes with that is programs to help in other ways. And there have been programs that have come out since COVID that are here definitely to help, especially first-time home buyers.
Fantastic. Well, you heard it here first, folks. You could close if you qualify for a first-time home buyer program. You can close with as little as $1,000 down.
Absolutely.
Well, I really hope that I thank Ryan for his time today, and I really hope you guys are enjoying this video, and I hope you got something out of it. Please don't hesitate to call myself and Ryan when you're ready to jump into the buying process.
Thanks,
Any parting
Kay.
thoughts, Ryan?
That's it. I appreciate you having me.
All right. Thanks, everyone. Thanks, Ryan.
Bye-bye.
Bye.